Hello and welcome back to the Cedi Investor. So it's no surprise that we are in a very bullish market this year, and as an investor, one thing we don't want to be doing is to be caught up in that loop of, are you buying something at an expensive price or at a cheap price? Because as an investor, despite we all wanting to buy high quality companies, good companies that are going to grow and give us return back as a shareholder, what we don't want to be doing is to buy those companies at expensive valuations, because yes, it might continue growing and over the long term you might gain some value from it, but what we want to actually do is to buy these companies at a fair valuation, or even better yet, a cheap valuation. That way we are able to position ourselves to make a return and also to benefit from the long-term growth of that particular company. So in today's video, I'm going over my sentiments. How am I feeling towards this particular Ghana market? So let's take a look at the chart right here. We can see my sentiments, how I'm feeling about these various companies, and this is a makeup of both the Cedi Farm portfolio and my main portfolio as well. So you can see right now in the buying sector, the companies that I'm still quite okay buying right now is Enterprise Group. When it comes to holding, I'm looking at MTN Ghana, Farm Milk, GCB, and Cowbank. Cowbank said they vex me over. I will explain it later. In the holding sector, MTN, Farm Milk, GCB, I'm holding these particular companies. Cowbank, I'll come back later to it. Watching, these are the companies I'm watching. Should anything happen, I'm probably going to be, buying way more of it. This includes GCB, EcoBank, MTN, and SIC as well. And selling, I have none here, but I've also put Cowbank. Now, for the Cowbank, it's probably because of, I would say, it depends on when you bought it. I bought Cowbank here at a very cheap level that, I've just forgotten about it. But if I was being very strict, it should be a sell. It's a company at this current price, I'll probably be selling it. Yeah, so I don't mind you having it in any of the sectors. It just depends on where you bought it. If you bought it at an expensive valuation, that one there, yeah, for you. It is not even a big position in my main portfolio, so it's the company that I've just just left it like that. So that's why I have it in the holding, but realistically it should be in the selling because it's not looking good. Now, when we take it a step further, and this is how I'm feeling towards the end of the year, the last 3 months of the year, how I'm feeling towards these various companies and sectors. I've divided it up here to strong bull. So I'm very bullish. I don't really mind you buying this company right now. Soft bull, you could still buy, but not as bullish as compared to the strong bull. Fair valuations, company I feel like trading at fair valuations. It depends on how you are viewing the companies when you should determine if you are buying or not. And remember, this is my sentiment towards end of this particular year. We have soft bear. That's companies I'm really bearish, but not very strong bearish. So depending on how you're feeling, probably are companies you should be looking out on, profit taking a little bit. And strong bear, these are companies I'll probably be selling out or removing from my portfolio at this particular valuation. So starting off with strong bull, we have EGL and SIC. Looking at these two particular companies, we could see there's a trend here. Both of these companies are insurance companies, and I've placed them in strong bull towards the end of the year for these 3 remaining months because I think they are still trading at cheap valuations. Looking at Enterprise Group, let's just take a simple look. The company is trading at 3.36 as of October 3rd, 2025. Year to date, up 69%. Almost 70%. So you might ask, the company is up almost 70%. So why do I still think it's a strong bull towards the end of the year? Looking at the PE right here, we have the PE of the company trading at 2.78, and I think that is very, very cheap. You can take a look at the PE over the past 5 years. This is not the cheapest the company has traded at, but definitely it's cheap compared to its historic level. I think these companies, premium companies, insurance companies, should be trading at a minimum PE of 4 to 5. I've said that in about 2 videos now, and I've even indicated that insurance companies as a sector in Ghana itself is massively undervalued. These companies are growing revenues massively, but then looking at the insurance market in Ghana, the penetration level is still very low, about 1%. So I see within the next 5 to 10 years, as people, their culture around insurance continues to change, I feel like this particular market is very underserved and has a massive growth potential over the next 5 to 10 to 20-year period. And the same can be said for SIC as well. The PE ratio around 2.78. So I wouldn't say it's massively undervalued compared to that of like Enterprise. I do think it's getting close to my 4 PE ratio where I would be comfortable with seeing insurance companies at. When we go to the next sector, we can also see another similar trend here. We have GCB and EcoBank Ghana. These companies are all banks, and I think these are the two strongest and biggest banks in Ghana. Now, I think these companies, I would probably even be shifting them to fair valuation because their prices has been increasing steadily over the past few weeks. Looking at the remaining 3 months, I'm not as bullish as I was for the Enterprise and SIC. So I can even see if you would even push it towards fair value for the remaining 3 months of the year. But then, like I said earlier, these are the two biggest banks in the company. My only key concern was probably I wanted to wait and see how Q3 is going to be, because I was a little bit concerned as to how fast they are going to be growing their revenues. I know they are going to grow their revenues, but then because of the low interest rate environment, I wanted to see how fast these companies are going to grow their revenue. I think I can foresee the pace slowing down a little bit, and I don't really want that for my companies. I want my companies to be growing at a fast rate. So that was my only key concern. In terms of fair valuation, I have MTN here, Total, Republic Ghana, Farmlaw. I think these companies were, within the first 2 quarters trading at, I was very bullish or even soft bull depending on them. But right now, the prices of all these companies, I think, are trading at reasonable valuations. I wouldn't say they are trading at the most outrageous prices, but I also don't think they are trading at cheap levels right now. And right now, my sentiments for them towards the end of the year is, I'm just honey hot. Like at this day, I'm just holding these companies. I'll probably not be selling. I'll probably not be buying anymore towards the end of this particular year. So that's how I'm feeling towards these companies. They've all traded up massively, down relatively well. But I do think they are even, some of these companies, I even think they are even more on the premium side. Like they've crossed the border of fair kakra. They are closer to premium rather than fair. So that's what I'm feeling. For the soft bear, we have Access, Total, Go, and BOPP. I think these companies are trading at high valuations, but if you do want to hold them, I don't mind. So I'm not very bearish as to I would advise or say, sell these companies right now. I still think some of them are great companies. I've made videos about Total and Go. They are great companies, but I think I gave my reasons as to why I personally don't like buying petroleum companies. If you do, it's all good, but I gave my particular reasons. BOPP as well, I think it's a good company, but it's trading at a high valuation, currently trading around 37 Ghana cedis. Access as well. Access is a bank I really like. I think this is one of the banks I would say, I won't say sad, but like, it bashed me small, say I know by this particular company. I think it's a good company. I can't overlook the price. I think it's trading at a high valuation right now. So, if it was a company I did own, I'll probably be, I won't say selling out, but then cashing out some small profits and, just holding the rest. But I think it's a great company as well. In terms of my strong bear, these are companies that if I did own, and depending on when I bought it, I'll probably be selling out of these particular companies. Unilever and Cow. Unilever, like I said, I did a video about this company earlier, and I think it's a good company, but there's a lot of wrong things that is happening with this particular business. Looking at first glance at how the business is being run, I don't really like it. Personally, if I was in that particular position, I would probably be looking to change all the board directors and the managing director and whatever of this particular company. I think they've not done a great job, and they will be the downfall of this company. Not downfall as in like it's going to be bankrupt, but then in terms of maybe shareholder return, I don't really see this management doing anything good for this particular company. Also, the stock price is trading at a very high valuation. I'll probably be profit taking. Cowbank, yeah, yeah, can ask him. This particular company, eh, this company, goodness. And the funny thing is, I would say I have some sort of connection with this particular company just because it was the first stock I bought. This was the first company that also paid me dividends. So I can say it's what even initiated my love for investing. But holy moly, Charlie, this company is down bad. Hey, oh, honestly. So I'm not really going to talk much. But if I was going to, Charlie, this video no go end. The company is down bad. We are waiting for the Q3 earnings reports. So hopefully, when their earning reports are released, I'm going to go over them, and that could, change my narratives towards this company. Am I going to feel the same way about them after the Q3 report? I'll be hoping to see. So that's how I'm feeling right now. But like I said, it's always good to review your thoughts and see if your investment is aligned with your strategy. So yeah, that's what I'm feeling right now. Thank you so much for watching. Comment down below what you think. Are you in agreement? Do you disagree? I would love to know. Let me know what your sentiments or your thoughts are for the remaining 3 months as well. Are you investing? Are you holding back a little bit, taking a break and waiting until next year to gather up more momentum to start investing again? Because personally, a lot of people I do know have, because of how bullish the market is, almost everything is going up in price. They've taken a break out, like they've slowed things down, because if you're not careful, you could be buying things at expensive prices, which, like I said, is not always the best thing for investors. So comment down below, like the video, share, subscribe. I'll really appreciate it. Thank you so much. Until we meet again, have a wonderful and blessed rest of your day. Peace.